Hello, everyone. It's Red with RedDragonLeo.com. It is January the 14th, 2015. It's been a while since I did a post. Just stay busy doing a lot of other things that have nothing to do with the stock market. So I don't write as many blog posts. But I did feel it was time to at least give you an outlook on what I think is going to happen in 2015. To the best of my speculation and guessing, flipping a coin. Anyway, what I think we're going to have, I don't think we're going to have a crash. I do think we're going to have a big correction. And so what we're going to look at here is the weekly chart and the monthly chart. The monthly chart first, and then we'll look at the weekly chart, and then we'll go with the short term as well. So let's look here at the monthly chart. As you can see here, this monthly chart is not mine. This is Ron Walker, who really does a really good job. I got to give him thumbs up for continually updating these charts all the time. They really are very valuable. And what you'll notice here, one of the things I spotted right off the bat here, it's quite obvious that at this particular point when the market peaked and broke down like this, that is when we seen the market start to teeter. It looks like it had 1 or 2 months down, then back up for one more new high, then it crashed, as you can see. And it did something similar over here as well. It went down for a couple of months. Once it lost this 70% line here on the RSI, the relative strength, it went down for 2 months or so. Then it went back up and made another high. This should indicate to us as well, everything looks very, very similar, and history does tend to repeat itself, especially on these large scales like the monthlies. You know, they manipulate the day-to-day action quite well, but over the monthly charts and weekly, it's not as heavily manipulated, I think. They do seem to play out and follow the charts fairly well. So you can see back here as well, the charts were on the ROC rate of change. It was just barely above the zero line. We've got a similar situation here, and you look up here, if the MACDs, how overbought they were up here, and we're even more overbought now. And it does look like we're about ready to cross over and go down. We did have a break already here on this monthly, and it looks like we're going to break 70. I do think we're going to have a month down probably this month, January, and maybe a little into February as well. I don't know how low we're going to go, but everything tells me just by looking at this chart, it's just losing steam. I think we'll have a month down, and we might see something similar to this where we have 1 or 2 months down before it kind of chops back up again and tries to go back up into later this year into, I'm guessing July, August period when we're gonna top. Bradley's got another turn date in July, mid-July, I believe. So it's probably going to be around there. And so everything tells me when I look at this chart, I think we are going to go down. The likely target here is this red line, which comes in at 1868 on the weekly 20-month moving average. And one of the things that I think will fool a lot of people is that if we start to head down and we get down in that range to in the 1860s, 1870s area, it's very, very likely that people will look at this and assume that we are going to go lower and hit the prior bottom here on the daily chart of 1820. So that, I think, will fool the most amount of people. Just like today, we have went down and we have come back up, and we closed with a bottoming tail, and we are still short of hitting this prior low of 1972. We've hit a double bottom here in 1992 area, but we have not hit this one. I think a lot of people were short today just assuming that we were going to continue on down and hit either this 1972 or pierce it a little bit and hit this 200-day moving average of 1965. Now, while I think that's still very possible and likely to happen, I don't feel like it's going to happen in a manner that's very obvious. In other words, tomorrow, while we could still dip down tomorrow and possibly retest this low or maybe make a higher low, I just don't think they're going to flush this out until next week or maybe the week after. I think we're about ready to have a bounce. And I say that just looking at these charts. So you can see they are going negative. And I do think that they're going to curl up here probably starting tomorrow after maybe an early morning dump in the market if they flush it down and just make a double bottom. That's possible. And then back up and back up into next week. That's what I think is going to happen. I do not know how high they're going to run this thing, but I do think that they are going to try to run it back up some in the next week. I'm not looking for anything huge, and one of the reasons is not only the monthly chart but the weekly chart. When you look at this weekly chart, you can see, I'm refreshing the page now, and it was solid red there. Now it's a little bit less. It is going negative. It is at the 50 line. It is heading down. It's pointing down here. And now we know that they tend to manipulate these things and curl them back up. We do know that. And I do expect that to happen. But I don't think that they're ready to break this line this week. And so when you look at that, that is 1974. So another reason I don't think that 1974 is going to be broken this week, if we even do go down that low to retest it tomorrow. If it's, it could happen, but I just feel like tomorrow will probably, that's Thursday the 14th. I think it'll probably just go down, either make a double bottom, slightly higher or slightly lower low, but not all the way down to hit that 200-day moving average, which again is at 1965. I just don't think we're going to flush it out. I don't know, just a feeling. But after that, I do think we're going to run up. We're going to curl up. The daily chart is suggesting that we're going to curl up and go up some. The weekly, however, what I think is going to happen here on the weekly is that we're going to have 1 week, maybe one more week of next week, where it looks like it's quite positive. And then I think towards later in the week, I think it's going to roll back down again. I think we're going to break this blue line by the end of this month. I think we're going to have it broken clearly. And I think we're going to head down here to about 1860 to 1870 area. Higher than this, but enough to break this line and get everybody bullish. I'm sorry, everybody bearish. And then at that point, I think they will start to turn it back up and do a choppy move up and go up here and get back in this area again and head on up past 2100 into August. But I don't think that they're going to actually go down here and hit this. I think they're going to fall short of it and trick a lot of people, and that way they can have plenty of bears to squeeze. If they get down to 1850, 1860, 1870, and everybody's going to be jumping short, just assuming that because this line broke, that it's just going to collapse. But a common thing would be to go down here and turn and go back up and then do a back test later in the year to back test up at a higher level, maybe even recapture going into it. I don't think it's going to go up to hit this one, this higher blue one, but I do think they're going to go back up and back test this. But that right there is, let's see, February, March, April. I guess that's what that is. February, March, April, yeah. So if you project out a couple more months, you're going to be over here off the chart into July, August, which will put this up here above 2100. Somewhere 2100, 2200 is probably where we'll end up. And then we'll roll over. And all this time, what I think is going to happen with the monthly is going to struggle up here. And it's going to keep, it's going to start rolling over. And I do think it's going to go down here, and we're going to see a late fall dip on this monthly chart. It should dip down in later this year into well, July, August, deep into say October or something like that. We'll probably see several months of this go negative, and then we'll see it curl back up, and we should have one more final rally. I do think as this thing starts working its way down, losing some of the steam, I do think we'll have one more final rally up into the year 2017, primary wave 5. But I think we're looking for a primary wave 4 down, which should look like this one here. As you can see, this went from about 1400 all the way down to just under 1100. It's over a 300-point drop. I do think we're going to see something similar to that, so that's why I do think at some point we will come down here and hit this line into later this year, October. And if that pierces, then we'll go down here and we'll retest this. This primary wave 4 could be worse than this primary wave 2. It really could. So we got to keep that in mind. That because looking at the charts, as you can see, the monthly charts were still moving up from a very deep negative 150 on the 2008 low. They were moving up, and they just got it barely above the zero, up to about 50. Now we're up to 150. So you got to think now that it is a lot more overbought now than it ever was here at this point. So at this point, you can see it only had 1, 2, 3, 4, 5 months or something like that, where it went down here and had that primary wave 2 correction from about 1400 to about 1100. It only lasted about 5 months, and it barely went negative there on the MACDs. This one probably will go deeper. Will probably go deeper, and that's why I think there is a possibility that that they could break that and hit that. But we just really won't know that until later this year. But I don't think it's going to be a full-blown crash. Again, I do think they're going to rip this back up one more time into 2017 before they finally top it out. So if they're able to hold this line into October later this year, wherever this line comes in, if they're able to hold it, obviously it'll give them a lot more strength into going into 2017. Let's see, what else? But on the short term, as you can see, we are still heading down on the daily. And it does indicate that we could have another move down. Probably tomorrow. I really kind of think they're probably going to have another move down tomorrow. I know it doesn't seem that way. Let's refresh this to make sure that this shows that move up. Okay, as you can see, it is still heading down, and it looks like it's making positive divergence if you draw this line. But I think a lot of people probably got long here at this bottom when they seen this big rally. I don't know if everybody noticed or not, but oil took off tremendously. I mean, it jumped from 46 bucks to like 49 very, very quickly there towards the close, the last few hours of the close. And that is an indication that we're getting ready for a turn in the market. So as you can see here, you've got this up move, down move, up move, down move. Now the ideal situation here is for them to roll it over, flush it down one more time, and if they do hit this area again, this 1972 on down past that is 1965. I don't know. I feel like they're not going to do that this go around. That they're going to save that till next week. That they'll hit it next week. And the reason I say that is because I think that we are going to continue down in this market all the way into the end of this month. And the reason for that is because of legatus. You have a legatus meeting. If you look at this, it's on the 29th through the 31st. 29th through the 31st is a legatus meeting, and coinciding with that, you also have a FOMC meeting, which is, and I'll open that up right here. Oops. You open this up and you'll see an FOMC meeting around the same time period. It's almost like they're selling off. See, here it is, January 28th through 29th. I kind of think that what they're doing is selling off in front of these minutes, and they'll turn in the legatus meeting and go back up. That's why I think this selling is not done. Yeah, I think we're going to have a short-term bounce, but I think we're going to go lower into the end of this month, into January. The monthly chart certainly supports that. Weekly supports that. But bounce into this week, holding the trend line, possible. But beyond that, I do think we're going to head lower. And I think that 1800 area, in that 1800 zone, again, is going to be our downside target, which you have it down here at 1820. I don't know if they're going to go that low, but I'm thinking that 1860 area, at 1870 area. And again, the reason for that is because of the monthly having a is it the monthly or the weekly I was looking at? Let's see, maybe it's the weekly. Nope, monthly. There it is, 1868 on the monthly. I just think that's going to give it some support, and that is this line here. It'll trick the most amount of people, and that's what Skynet does. Guys, the supercomputer that runs this computer, that runs this stock market, is extremely, extremely smart, and it tricks you every time you think that it's going to go one way or the other. You get fooled. I mean, I know a lot of people that were looking. If I look at some charts here, I know a lot of folks that were looking at the move. Let's see here. We'll go with the 30-day. That'd be fine. There was a move up that I think fooled a lot of people. You looked at it, it was a bear flag on the 5, 10 minute, 15 minute chart. And that was this move here back from, what was that, Tuesday. You seen this move up, and then you went down, you chopped sideways, made a bear flag. They let it play out, and come Monday morning, this Monday the 12th, it dropped, went up a little bit, kind of down a little bit again, chopped sideways. You know, this whole move could be considered a bear flag. And then anybody that got short on this one thinking it's going to do like this, what happened? They just got creamed right here on that scream up. And then you have a huge drop of over 50 points. Just on that one day, it actually hit down here. It's like 50 some points, I think, just to that particular day right there. And then, of course, today, Wednesday, it dropped more and then ran back up into the close. I just don't think it's done. This first attempt here, I don't think it's done. It's just too bearish of a chart. I do think that we might roll over again tomorrow, then come back up, and then start a rally into Friday. Remember, Fridays do have a tendency to rip higher. It is options expiration week, so you know they don't want to pay out anybody that's short. So if they do have a move down tomorrow, I'd exit any shorts, that's for sure, if they do have one down. So anyway, that's it, guys. I know I don't do these updates very often, but I'm still around. Anybody want to chat on the blog or tweet me or anything like that, I'm still around, or email me. I am just busy with a lot of other things and just don't have the time to write as much as I do. So, but I did want to get this out to you. So good luck, everyone, and I'll see you on the blog. Thanks again.